First of all, again, welcome. You all know BT Capital Partners, so we don't need a new introduction, but I would like to highlight that just as a reminder that BT Capital Partners works with high quality asset managers, and we bring their funds and their products to professional investors in the Benelux. The reason that we started collaborating with Hashdex is that a lot of the investors in the professional space that we speak with, they're asked by their clients what to do with crypto. And it's a tricky asset class, and it's something these days that professional investors can no longer avoid not having an opinion about. And there are lots of different ways, of course, to play crypto. And in our view, working with Hashdex, with their products, is one of the easiest and easiest regulated ways to gain a diversified is important exposure to this asset class. Last thing I want to say before we give the floor to Samir is from compliance is this webinar is recorded. It is only for professional investors, and we are invested in one or more of the products that are presented today, so you can call it skin in the game. So with that said, Samir, I'd like to give the floor to you, and I would like to say to the audience, if you have any questions, please feel free to use the Q&A section or raise your hand, and then we can address those as we go along. Thank you very much, and Samir, the floor is yours.
Great, thank you so much, Walter. It's a pleasure to be here today. Share a little bit about our insights for this asset class. Like you said, this is a new asset class. There's a lot of questions from clients, and at Hashdex we try to bridge this gap and filter the noise that we see on the internet, social media, into real investment thesis, and then products that professional investors can leverage to diversify their portfolio. So a brief introduction about Hashdex. So Hashdex is a crypto-focused asset manager. We've been around since 2018. We have a global presence in multiple regions. We have right now close to $1.4 billion in assets under management. We have the largest crypto index ETP in Europe and the world's largest crypto index ETP. And this is a partnership that we had with Nasdaq for a few years now. So we helped to co-develop the benchmark for this asset class, just the Nasdaq crypto index. Okay, so it's sort of like the Nasdaq 100 for crypto. That's how we designed this benchmark. And the products tracking this index, they are the largest products in the world when we look at diversified access to crypto. And a brief why crypto on our side. We see that this is a new asset class. Okay, so it has characteristics of a new emerging asset class, a new technology wave that can transform our society, that can increase the productivity of our society, but we're still in the very early stages of that technology. So we can see, as investment case for crypto, we can see this strong growth potential. Okay, so crypto is a global borderless asset class. Has a lot of use cases, Bitcoin being the most famous. But on Bitcoin and other crypto assets, it's very important to highlight that they have this supply scarcity, which makes it sound like a digital commodity, okay, and something that you can look for as a hard asset on your portfolio. It has very strong macroeconomic features, both on Bitcoin side, but also on the other thesis. They benefit from the changes we're seeing in the geopolitical and macro environment landscape, especially Bitcoin as a hard asset, as emerging digital store of value. And this is also very interesting to see how that is changing over time in our society. So more and more investors are looking to Bitcoin as an alternative to gold. Okay, and in fact, I was just listening yesterday a podcast from Ray Dalio, and it was very interesting to see how every time he was mentioning gold, he was mentioning Bitcoin as well. So we've seen this shift in our society. 5 years ago, no one would talk about Bitcoin as a potential alternative to gold. Now, most of the macro investors are putting gold and Bitcoin in the same class. Okay, so this shift is happening. And it's when we think about asset allocation in a multi-asset portfolio, crypto has very interesting diversification benefits. So it's technology that's uncorrelated with the other factors you have in your portfolio. So the drivers of adoption, of demand, of value for this asset class, they are completely different from the other drivers that you see in your portfolio. So this brings a very interesting diversification benefit when you're thinking about asset allocation. And also, we are in this digital transformation of our society, in which more and more we're having like a hard time to differentiate what's real, what's not, and especially with this rapid adoption of AI, crypto and blockchain, they bring this layer of trust in this digital realm. Okay, so crypto can be um, a path towards AI adoption that protects our privacy and also protects the trust we have in our society. So that's in a very short nutshell why we think that this asset class is here to stay. The investment case is strong and is getting stronger by the day. When we look at the geopolitical factors, when we look at the macroeconomic factors, when we look at the technology revolution that's happening, including AI, and also I'm going to speak like further here. When we look at the political side, there's a big shift happening on crypto that's beneficial to the crypto investment thesis. And what we see is that like an strategic asset allocation to crypto can improve the risk-adjusted returns of your portfolio. So what we normally see in traditional portfolios is that one allocation from 1 to 5% in a diversified crypto exposure, such as the Nasdaq Crypto Index, can improve the portfolio metrics. Okay, so here's a simulation of like a portfolio with 0% allocation to crypto, and like a 60-40 portfolio with 0% allocation to crypto. And the impact of adding only 1% to crypto, you improve the Sharpe ratio from 0.63 to 0.71. Okay, so you improve the return of your portfolio, the annualized return of the portfolio, and without changing too much the volatility. So this is diversification. Okay, although it's a very volatile asset class, because it's uncorrelated, it brings this diversification benefit to your portfolio. So what we normally see is that 1 to 5% allocation is what we've been seeing professional investors looking into as they look the portfolio in a strategic way. And when we look at the performance last year was a great year for crypto. And we can see here on the Nasdaq Crypto Index performance, we had like more than 100% return on the Nasdaq Crypto Index last year. And most part of that return was generated after the November 5th, the election, the US election, like a new administration coming to the US with a pro-crypto stance. So people have been hearing about Bitcoin for a long time. And this is mostly because of the macro environment we're in, and also the political environment in the US, which was very aggressive towards other crypto assets, towards smart contract platforms and their applications. And what we expect now is that with this new administration, with will come some regulatory clarity that will allow this industry to thrive. That's why we're seeing all the NCI constituents on the right side here, they turn to positive after the US election. And a lot of those assets outperformed Bitcoin. Okay, so we are seeing a regime shift. When we look at the performance in the last 2 or 3 years, we could see that Bitcoin was performing better than the Nasdaq Crypto Index, better than the other crypto assets. And especially after the election, we've been seeing other crypto assets performing better than Bitcoin. And this is because we've seen a very significant regime shift on the political stance in the US. And this is part of our 2025 investment outlook. So we published this outlook in mid-November of last year with some of the topics that we think are going to be very relevant for this year. I would highlight the three major ones. We're seeing like a notion of opportunity coming from this political change in the US, the US election outcome, with the prospects of more ETFs being approved in the US, more regulatory clarity for the technology to advance. And especially when we think about opportunities, the intersection between crypto and AI is happening. And that's a huge area of a huge opportunity to create value. The intersection of those technologies, they can be very transformative to our society. And when we look at Bitcoin specifically, the digital gold narrative is expanding. So we've been in a phase where, like 5 years ago, uh, retail investors were looking for Bitcoin as a potential alternative to gold. 2021 and 22, we started to see companies looking for Bitcoin, such as MicroStrategy and others, Tesla, PayPal, like starting to look at Bitcoin as a potential store of value. Then came asset managers like BlackRock and Larry Fink talking about Bitcoin as this digital gold. Now we're seeing governments talking about it. So we have this discussion in the US about having a strategic reserve of Bitcoin. We've seen this discussion popping up in the European Union, in some countries in emerging markets. This discussion about having Bitcoin as part of their gold reserves, as part of their store of value reserve for central banks and sovereign wealth. This is a very live discussion in our society right now. Public pension funds are investing into crypto through ETFs. So we're seeing a huge transformation and we say that this is crossing the chasm in the sense that Bitcoin is going from the early adopters to the early majority of the adoption curve. Okay, so this is a very transformational moment for Bitcoin specifically. And when we look at the other applications of smart contracts, we've seen conditions to see new killer apps coming. So what is this? We're seeing scalability solutions coming to smart contract platforms. So for those who might have heard about this, the applications of smart contract platforms, they're very promising, but we had a big problem up until now in terms of scalability. If you try to use those applications, they would be extremely slow, complex to use, and expensive to use. But right now, with the improvements that we saw in the last few years, we believe that smart contract platforms are finally ready to scale to billions of simultaneous users. And this creates the condition for the technology for new applications to come. And then when we look at the macro environment improving for risk assets and the political environment improving for crypto overall, this is the ideal conditions for seeing killer apps and seeing probably what we call like a chat GPT moment for crypto, when we see more killer apps, more applications that really come to our day-to-day life. So we've seen ideal conditions for a killer app to come up this year. So those are the frontiers that we're exploring in our investment thesis.
Samir, if I can interrupt you for a second. If you talk about killer apps, I think the general public or our investor base or our audience usually are aware of Bitcoin as digital gold, but often the question is like, yes, we have blockchain, but it's a solution in search of a problem, basically, right? And do you see already real apps that are being used day to day, whether it's a finance or is it maybe booking a trip? And to the audience, this is not a loaded question, but more, can you give an example of one of these killer apps that you expect a lot from?
Yes, yeah. So there's one big example that we've seen, especially in emerging markets. It's a huge adoption of stablecoins. Okay, so stablecoins are being used as an alternative to access the US dollar. Okay, just like we saw the euro dollar after the Second World War, like a new banking system coming up on dollar reserves outside of the US. We're now seeing what I like to call the crypto dollar coming up, which is emerging markets are looking to get exposure to the dollar through stable coins, through tokenized dollar deposits. Okay, and they're using this for payments. They are using this for trade finance. They're using this for cross-border settlement. And why emerging markets? Because in those markets, the dollar is harder to access. It's more expensive, and they normally have some levels of capital controls. So we're seeing this in China, like the population in general in China, stablecoin is the easiest way to access the US dollar. We're seeing this in countries in Africa, in LATAM, Argentina, Brazil, Colombia, Venezuela. They're all growing their adoption on stablecoins for payments and even for stored wealth. Okay, so beyond Bitcoin, we've been seeing a huge adoption of stable coins. We haven't seen that type of adoption yet in the European Union and in the US, and that's mostly because of lack of regulatory clarity. Okay, because
Yeah.
banks don't have clarity to offer services on top of stable coins. And we think this is changing now with MiCA, with the new regulatory regulatory framework for crypto in the European Union, and this is going to change now with the US, especially with this new Congress, when we have like a stable coin act being discussed in the Congress. So if that's approved in the US, we're going to see the large banks offering infrastructure for payments on stable coins, and that can be a huge improvement in efficiency in the economy. Okay, so I think this is one of the biggest killer apps we've been seeing so far. And after the dollar deposits are tokenized, then we can start talking about tokenizing other assets like money market funds, like alternative investments, like equities. And this movement of tokenization of the economy can be a huge driver for adoption. So this is one topic on finance. So transforming the rails of finance to be digital native. Another big factor that we're seeing is this intersection of crypto and AI. Okay, so AI agents are coming. So most of the AI providers like ChatGPT, like OpenAI, they are exploring agents, and those agents, they're going to exchange value through crypto. They're not going to use Visa or MasterCard networks. They're not going to use Wire or like old-fashioned systems that are made to humans. They're going to use digital native payment systems, and that's why we believe we're going to see a huge explosion in adoption. It's AI to AI payments, AI to AI coordination. Okay, so those are, I believe, those are the big trends that we're going to see when we think about adoption and killer apps in the coming years.
You.
And then when we're talking about the elections, the Trump election is changing the playing field. So we have impacts on the short term, on the medium term. We saw like last year was a big week, like last week was a big week. We had the executive orders creating a crypto working groups to explore the technology, to give regulatory clarity to the technology. Changes at the SEC, they are really good for crypto overall. On the medium term, we believe that the most impactful changes are coming from Congress, from new laws and regulations. They are being discussed in a Congress that's now has a majority pro-crypto. The majority of the lawmakers in the US right now, they are pro-crypto. So this is a very significant move, and we believe that this is going to change completely the playing field looking forward. And like I always like to highlight, crypto is way bigger than just Bitcoin. I like to compare crypto with the internet in the 90s. Okay, so we are in crypto right now, just like we were with the internet in the 90s. And in the 90s, the only application that people understand about the internet was the email. Okay, so I believe that Bitcoin right now is like the email in the 90s. Okay, so it's a big application, it's a killer app, it's one that's going to change our society, but there's just so many things happening that are going to transform our society, and they're going to create way more productivity to our society than just looking at store of value thesis. So we can see this in this infrastructure of smart contract platforms and the applications when we see at like finance application, digital culture, Web 3.0, this intersection with AI. So there's so many possible applications that we can explore blockchain technologies. And that's why we designed this product, the Nasdaq Crypto Index, to be like a way for traditional investors to capture this growth in this asset class. So this is our flagship product worldwide. Okay, so it's the largest, like I said, largest crypto index product worldwide. Is designed to be a way to get a broad exposure to the asset class, a dynamic way to get exposure to this asset class. So this index is all the governance is run by Nasdaq. Okay, so it's the same committees that handle the Nasdaq 100 and other indices. They have a quarterly rebalance process in which new assets might come in, or assets that are not eligible anymore might be excluded from the index. And the idea here is that no matter where this industry goes, an index approach will capture this growth of this industry. So right now, Bitcoin is the most relevant use case. That's why it has a very significant weight in the index. But if in 5 years from now we see like advancement of new applications, which is what we believe is going to happen, this index will adjust automatically, and the investors will benefit from this automatically. So for a traditional investor that is looking for like a 1 to 5% allocation in the portfolio, this type of exposure uh, can provide the solution that they need, a dynamic, future-proof solution that will adjust to the crypto market as this market matures. Okay, so instead of speculating over single assets, so investing in only Bitcoin and then losing smart contracts and applications, or trying to pick which applications, which tokens to invest in, uh, we propose one solution, one index strategy for an asset allocation, for a strategic asset allocation to this asset class. So this is our flagship product. And the second one that we think is very interesting, especially for professional investors that are more active and like to explore different theses in their portfolio, is a momentum strategy. Okay, so this other product, the ticker is HUMO. It's a momentum ETP. So this index is rebalanced monthly. Okay, and it's weighted by momentum and risk parity. So the idea here is to capture the trends, the short-term trends we're seeing in crypto. So this is more like for a tactical allocation. So if we believe that we are now in a bull market in crypto, that prices are going to outperform in the next 6 or 12 months, an allocation to a product like this can help you capture this wave. Okay, but this is more like a tactical product. When we look this overall over the cycles, we can see that a crypto allocation through NCI outperformed a Bitcoin allocation, a momentum as well. But you can see here clearly on the chart that the momentum strategy during the bull markets in crypto, it outperformed by a lot other assets, and this is happening now again. So again, it's a way more volatile strategy. As you can see here, the volatility is it's very significant, but can be an interesting tactical play for more aggressive investors. So what we normally recommend is look for like a strategic asset allocation using an index like the Nasdaq Crypto Index, and then on top of that, for more aggressive investors, you can play the timing on the market using strategies such as the momentum one, which is we're presenting here. And I think that's it, Walter. Like last message, just like to leave you with this, like Hashdex is a specialist firm focused on digital assets. So we have a set of investment strategies, different investment strategies that help traditional investors to benefit from crypto as a new asset class in their portfolio. And count on us if you need any support, education, want to hear more about our thesis, our products, okay?
Fantastic. Thank you. Thank you very much, Samir. I would also like to stress that this is not a fund where you have to subscribe and then 2 days later you get your position. These are exchange traded products. So you can buy them in your retail account with Saxo Bank or with any other major bank that allows these kind of products. And we're seeing adoption all over Europe. So as I said, we have positions ourselves. It's super easy to get exposure. You can buy it in the morning, and if you want to, you can sell it in the afternoon. They have the major liquidity providers in ETFs like Flow Traders and Jane Street and Citadel that make markets on these kind of products during open market hours. So it's a super easy solution, and hence why we liked the to partner up. Samir, thank you again for the presentation. If there's any questions from the audience, feel free to use the Q&A section. I think one more question for me is, Samir, I was wondering how you ended up at Hashdex. What's your journey been to end up as CIO on this firm?
Yeah, so I've been at Hashdex since the early beginning, so since 2018. And my career has been on traditional markets, especially on high frequency trading. I started to get involved in crypto around 2016 when I was very skeptic about crypto overall, but I heard about this like blockchain being used to transform the financial markets and how we could explore that. I started studying that technology, and then I saw the potential it had to just like create so many efficiencies in our society, in our capital markets. So that's when I started to invest in 2016, 17. And then the natural challenge as you started to invest in crypto back then was how can we do this in an institutional grade way? Like I just like for institutional investor, I can not just go to Binance and buy assets and store them on a wallet, a retail wallet. We need an institutional grade solution. That's where the need for a provider player like Hashdex started to come up. And then I joined the company in 2018, and we are very proud to be pushing this industry and helping this industry to mature when we look at the regulation and the market infrastructure side. So Hashdex was the first company to have a big four auditor supporting auditing the products, to have daily NAVs. We launched the world's first crypto index ETF. So we've been in the frontier of this crypto becoming mainstream and coming to traditional investors for a long time.
Nice one. Okay, perfect. Okay, so no more questions, I think. Samir, again, thank you very much. That concludes almost exactly within our time limit of 30 minutes. Thank you to everyone in the audience for joining today. As Samir said, if you have any questions, feel free to reach out to us or feel free to reach out to Hashdex directly. We're happy to assist wherever necessary. Thank you again, and I wish you a great rest of the afternoon.
Thank you so much, Walter. Bye-bye.